By 2005, in late 2000s, we had social media. Facebook came out, Twitter came out. We had smartphones delivering this kind of interactive media, and it was only capable on the internet, and you would not have created that in print form, right? And so I think of the same thing. This is a new medium of money. It's capable of doing a lot of tricks that you cannot possibly do in traditional form. And so I don't think we've even discovered what this new financial system will express itself. Yeah, I mean, when I'm talking about this, I'm talking about Bitcoin and the greater ecosystem, including the experiments that are happening inside the other alternative networks. Some of the interesting stuff is happening there with non-fungible tokens, NFTs, where they're unique. And I think there's a lot of interesting experiments being done, and we're just learning. I think there's kind of two tracks right now. One is reinventing the old financial system, or maybe transplanting it onto these networks. And then there's another area where we're kind of experimenting on what these things can do on their own right. It's early. I can't really see how it's all going. And also I'm very specialized within Bitcoin, analyzing the Bitcoin market. So
tell me about that, Willy. Like I know you're an on-chain analyst, but to be honest, I don't really know what that means. So can you explain to us what an on-chain analyst does?
Maybe like if you were to say an analyst in Wall Street, they look at numbers, right? They might go into companies and get company reports and figure out, whether the product's going to take off, whether, the public like what this company is doing, whether they, so this is what you do in Wall Street. If you think about Bitcoin, it's not actually a company, but it does have a blockchain. Right. And so we can analyze that ledger, and we can see all transactions on that ledger, and we can measure all parts of the network. And so this is the kind of equivalent in the crypto world, is we can measure the network, and we can, hook up kind of our ECG onto this network and get all the readings off it. And from that, you can kind of read what's happening with the network. You can see, so it is on-chain. We call it on-chain because we're looking at the ledger, but it's actually more than the ledger. It's the entire network we look at. And we analyze those numbers coming off it. We build models and charts, and you can see all sorts of stuff. You can, for example, the early part of this year, we saw an immense number of very large buyers come in, very large transaction sizes, taking a lot of the supply out of the exchanges where a lot of people, trade and store their coins. So very large buyers came in and scooped them off. And that was also that telltale sign of institutional investors coming in, and high net worth investors coming in to buy Bitcoin. From that analysis, we could see, look, wow, we've never seen this before. There's huge demand from very large buyers, and you could see the price shoot up. And a lot of speculators would have looked at that and said, well, this price is climbing a sheer wall. Thing's in a bubble, and it's going to blow off, and it's going to pull back and correct. And all their technical signals, which is simply just looking at price and the rates of climb, more or less, would have said, this thing's getting well overheated. But if you look on chain and look at the fundamentals of who's buying and the size of it and how much of the demand there was, on the actual ledger, you go, whoa, this is not overheated at all. You can sort of build models around it and say this is what the price these investors are supporting. We're in 2021, obviously. It's a very special year because Bitcoin does this 4-year cycle, and we're in that special 4th year of the cycle that everyone gets excited about, which is when price comes out of nowhere and rips upwards in a very fast trajectory when the entire world takes notice. And the last time we had that was 2017, and the year before that was 2013. So it's a little bit like a comet revisiting. And the reason behind that is actually it's designed into the Bitcoin's protocol. When you start this network, you've got to give the coins out, right? And so we bring them into existence by mining them. And so like miners will come in and put in a lot of electricity to process the transactions. For that, they get a reward of new coins being mined into existence. So this is kind of the inflation schedule of Bitcoin. And so every 4 years, the rate at which these new coins are brought into existence halve. And so what happens is if you've got half the number of coins being created every 10-minute block, if the rate of coins gets halved, and that happens once every 4 years, what you get is a mismatch between the demand and supply, because the supply just got halved. And so that creates a supply shock, and it gives essentially an impulse to the price. And so it takes about 6 months, usually roughly 6 months, before that reduction in supply makes itself known in the market, and the price starts to climb. And it starts to climb and climb and climb, and then everyone gets feverish and we go through a bull cycle. And so that's where we are in 2021. That's where we went in 2017. And 2013 was the first really public one of that. But it was really for the very technical. In 2017, that caught the public eye for the very first time. It made, CNBC, mainstream news. And I call that the cycle where retail came in and got very excited. Everyone got access to buy. And the cycle we're in now is essentially building on top of that. And now it's the institutional players that are coming in. Like Bitcoin now has reached that line in the sand called $1 trillion market cap. So it's an asset bucket that holds $1 trillion of valuation. And at that point, institutions take notice, because all the major asset classes in the world, they're measured in trillions, not billions, not millions. If you're going to have real estate, that's like a $250 trillion asset bucket. If you're going to have bonds, I think that's in the over 100 trillion. I'm not sure exactly that figure. Stocks are 100 trillion. Fiat money is 100 trillion. Gold is 11 trillion. And now you've got Bitcoin that just sort of birthed into that $1 trillion club. It's de-risked enough and liquid enough and big enough for the institutions now to come